Imagine this. You've lived a disciplined life for decades, saving, investing, avoiding debt, paying insurance on time. Then, one day, it wasn't an accident. It wasn't a stupid decision. It wasn't an extravagant lifestyle, just one medical diagnosis. And everything you've built is gone, not because you failed, but because the system was never designed to save you. She wasn't careless with money. On the contrary, she was the one who understood best how it should be managed. Let's call her Anna. Anna worked in financial planning. Every day she helped others plan for the future, creating budgets, building emergency funds, preparing for retirement. She knew the risks of life. She knew the importance of protection. She did everything right. Her emergency fund was well stocked. Her car was paid off. Her retirement savings were regularly topped up. And she had health insurance through her workplace, a plan she considered safe. She'd calculated everything. There were monthly premiums. There were deductibles. There were out-of-pocket maximums. In the worst-case scenario, she thought everything was manageable. Then one day her life changed because of one small thing. A lump, a follow-up exam. And in the words no one ever wants to hear, cancer, not terminal, still treatable. The doctor was quite optimistic, and most importantly, she had insurance. It should be safe. But what happened was the opposite. Months passed, and bills began arriving from sources she never imagined. Each piece of paper felt like a gentle blow, not devastating, but persistent. The out-of-pocket limit she believed to be her maximum protection turned out to be no solid wall. It was just a thin line that disappeared with each passing year. Treatment continued. Years passed, and the cost calculations started back at zero. Some claims were denied as medically unnecessary, even though they were prescribed directly by her specialist. There were charges from medical professionals she never chose, never met, and couldn't even refuse because she was unconscious on the operating table. For the first 4 months, her emergency fund was depleted. A few months later, her retirement savings stopped. Soon, credit cards began accumulating balances, and eventually, she withdrew from her future savings with penalties and taxes to pay for today's expenses. She survived her cancer, but her finances did not. Decades of discipline were shattered not by mistakes, but by one harsh reality: insurance doesn't work as promised. And Anna was no exception. Most people believe that having insurance means security, that there's a threshold that won't be crossed, that if we do everything right, the system will protect us. That's not true. In reality, most personal bankruptcies are directly related to medical problems. And shockingly, the majority of those who did it had insurance when they got sick. They weren't negligent. They weren't careless. They were just sick. The problem isn't a single loophole. The problem is a deliberate pattern. Annual cost limits reset every year, while illnesses don't follow the calendar. Claims are denied not because they're rare, but because they're common. And the system relies on one thing: patient fatigue. When people are sick, confused, and overwhelmed, they tend to give up. And every time someone gives up, the system wins. Here's a truth rarely spoken honestly. The system isn't broken. It's working as designed. Profits come from paid premiums and unpaid claims. There are procedures, algorithms, and bureaucracies designed to slow things down, filter them out, and exhaust them. In this game, patients are not customers. The patient is the enemy. Awareness is the first line of defense. Not fear, not panic, but understanding that insurance is no guarantee of safety. It's simply a game of chance. The question isn't whether a health crisis will come. Statistically, it's highly likely. The question is, will you see the trap before you fall into it?